Oh, this shows up on YouTube. I was trying to get it to display and it wasn't displaying. So I hope everyone can also hear me fine. You guys should be able to. It looks like everything's set up properly. But many of you guys may know I used to hold Iren or Iren, however you guys pronounce it. But a big reason I sold was lack of conviction, mainly just because I was kind of getting a little worried about the deals not coming in. I also never did a ton of DD, if I'm being completely honest. I bought at $18. To me, the thesis was simple. We don't have enough power or land. This is going to re-rate. And from $18, it really did re-rate, and my thesis played out. And I told myself when I got in, I was just trying to make a quick swing out of it. And so when it ran to $60 and I saw momentum starting to fade, I was like, this feels like a good time to take profits. But I want to check this earnings out, which is dropping in a minute. It should have just dropped. Let me see what we have. I'm not expecting like crazy numbers. I think most of everything's going to be in the presentation that we want to see. So I'll pull up the headline numbers here as they should have just dropped. They did. And here we go. So Iren, uh, it's not disclosing EPS here, assuming it was negative, and then they beat revenue by 2 million or a million. Yeah, 2 million, million and a half, give or take. So I'm gonna go ahead and pull up the presentation because that's really what's going to matter here. But yeah, I really just want to see, were any deals announced? You know, are they on track with their ARR? Just any more build out plans? Because what attracts me to this name is the fact that they own the land, they own the power. Eventually, the next thing to do is going to be figure out the software stack. Let's see. I think it is this one right here. But I want the presentation. I don't want that. Let me check this out. Okay, they have not dropped the presentation yet. They dropped the results, though. Let me check this PDF file out. And I'm also going to, some of you guys might know, Joseph Invest. He covers this name quite a bit. I'm having him come on because he can give you guys more of the in-depth detail for you guys, where I'm more here just to actually observe what they're reporting and kind of see if it's something I want to get back into. So, new multi-year contract with leading Frontier AI Lab, 4 billion contracted ARR for 2026 capacity, 1 billion operating ARR today. So they have 1 billion operating today, 2.8 billion GPU financings, fund 90% of associated GPU capex. See, like someone's gonna have to tell me, did they already have 4 billion contracted? Cause I also don't know, did they have the new contract with the AI lab already, or is that new? Or is that new? Give me one moment. So we got, what do we expect? No. The stock is currently flat. Stock is currently flat. This Iren has secured another multi-year agreement. Okay, so that is new. So they landed another deal, multi-year agreement with a major frontier AI lab pushing contract ARR tied 2026 capacity to 4 billion. So they did get another deal. I'm surprised they're not, pumping on this actually. The financing structure is also notable. 2.8 billion GPU financing will fund about 90% of the related capex. Give me one moment. I'm going to get Joseph on here. I want his input. Okay. Joseph. Let me know when. So we're gonna get Joseph in here and we're gonna break this all down. Stock. Stock is still dumping, kind of. Not really. It's still very flat. All right, let's see what else. Okay. Growing platform and diversified customer base. I can see maybe if you guys can see this. I might be able to zoom in. Let's say 180. That's not what this thing is. This is not. Okay, this is not how I zoom in. Oh, this is zoom in. All right. So current 4 billion contracted ARR for 2026 capacity, 1 billion ARR operating today. I'm pretty sure they have 4.4 they're trying to get done for 2026. 2027 late stage discussions with a range of new customers over a significant portion of capacity. So they're in discussions for 2027, which is big because we also heard from CoreWeave and Nebius that they could contract all of 2027 already if they wanted to, but by waiting them out, they're able to squeeze out more money, and that's kind of been Iren's thing Iran's been getting crap for, but also their strategy pretty much this whole time, and why everyone's like, why don't they have more deals? Well, it's because they continue to wait it out, play the long game to squeeze more money. Um, Recent 3-year contracts, contract pricing increasing, driving more value per megawatt. So there you go. Like I said, so recent 3-year contracts over 20 million revenue per megawatt, representing a 2-year payback. Okay. I don't see this is why I need Joseph. I don't know what their payback used to be. Okay. Alright, Joseph's ready. Alright, bet. We're gonna get Joseph on here. Joseph. Hang tight for 1 second. Why isn't it pulling up? Oh, there it goes. I gotta remember how to call real quick. How do I call? You'd think that I'm like a grandpa the way that I work technology. I have no idea how to call it. Oh, I found it. I found it. Okay. He didn't pick up. I'll just give him a second. He said my Discord's not working. Alright, we'll give him a second, see if he can get it. Meanwhile, I'm gonna make this full screen real quick. I gotta move some things around. You guys gotta look at my face for a quick second. move. We're gonna put this over here. Yo,
Let's see if this works here right now.
all right, is this a normal call? I can't see my screen right now.
Yeah,
Okay,
bro, can you hear? How do I make it so people like? How do I make it so people like online on my stuff? Can you hear me?
I can hear you. Can you not hear me through your stream or something?
Yeah. Wait. What?
Hello?
Hello? Can you hear me?
Yeah.
All right, cool. I don't
Okay.
know if people on my stream can hear you. Do is the problem? I'm trying to see.
Yeah, check that because that's what I was checking the one
Maybe
time.
I'm.
They should be able to hear on mine.
Let me take this down. And I'm just gonna go and do my whole entire. I'm gonna do my whole entire stop screen. I'm gonna go and what I'm gonna do is I think I can do audio. So I think I can do share my screen, entire screen, wherever I go, share system audio. And then now maybe I can hear. I can go and check on Twitter. But I have, dude, I came in here and these earnings are unbelievable.
Yeah, I really
Three
needed you
Horizon
to
three
walk.
struck. What?
I said I really need you to walk through this because it's been so long since I've actually like paid attention to Iren at all that like I was
Uh,
already confused. I was like, I think this is a new deal. They're not just saying like it was signed this quarter. And then I
that's
was
I
looking
think I
through
believe
Twitter
that.
and it is completely new.
Yeah, that's what I'm trying to see. I'm going on right now and I'm making sure that you can hear I can hear you. Is what I'm doing right now. That's what I think. Okay, cool. Yeah, I can you can be heard on my stream. So yeah,
All
I
right,
mean
bet.
I need to go and look at this right now. Yeah, it looks like okay, so I thought they already said for which whatever one this was they had before. So that 2.8 billion and so this is the one from July, right? Which in July they came out and they said they're gonna do that. They had 7.6. So yeah, so they basically came out and said they're targeting an AI cloud run rate from 3.7 billion to more than 4 billion.
Mhm.
Then, so now today they came out and they said 4 billion right now, which I believe that is a new deal they signed if I'm completely right about this. But regardless, I think the biggest things that I took away from this, the four, that's right, but they have active discussions of contracts at $25 million per megawatt. They have three recent 3-year contracts of 20 million per megawatt. Whenever I was running my projections, I was only running at 9.5 to 10 million per megawatt. Like I wasn't even running anything in the 20s. I wasn't running anything close. And I was getting these numbers. And I mean I made this spreadsheet that if they actually have a $4 billion run rate, right? And they could if they run a $4 billion run rate, they realistically should actually 3x in the next year if they do that. Because and this year could actually be more than a 4. I mean, this should be, and they're going to sell at 100% of their capacity. So I'm just looking at this and I'm thrilled because one, I thought we were going to miss.
I
Who
I,
also,
I thought you guys were gonna miss too. That's kind of what, and that's not just me being like biased or anything. Like that's what Iren shareholders were telling me on X when I was like
yeah,
trying to like do a little bit of DD. They're like, because I think Sweetwater or something was late to getting live, or I don't know. It was a little
yeah,
behind maybe.
yeah, Horizon, yeah, I think they thought it was a little behind. And also, though, the thing is, though, it's like for any stock, I like whenever I think companies are going to miss or their earnings are going to be crap because every time everyone thinks that's going to happen, dude, they always come in good. And I'm really checking Robinhood right now to see if they do get another like dip or anything so I can go like
Dude,
maybe add some shares.
that's what I thought was crazy. Is it's just flat right now after landing that deal.
Which I don't know if they're trying to wait to hear them like talk or something, which that was crazy. But I mean, I think that, dude, I mean, that deal was like normal. Like, I think that wasn't even anything crazy. I think the biggest stuff I also took is the amount of millions per megawatt. Also, the customer prepayments are like 50% of GPU capex, which that's huge because now they don't have to go and dilute out shareholders as much, which everyone wants to play that game. Um,
Yeah.
and basically, they're all saying quarter 4 2026 you're going to have Horizon 3 to 4. um so that's very interesting. And if you just look at all of this stuff here, so the new 2.8 billion in GPU financings, I want to go look at the I'm also need to look at, do they have their balance sheet on here, dude? They gotta, I want to see their balance, I want to see how much cash they have right
They
now.
didn't do a presentation this time, did they?
What?
They didn't do a presentation this time, did they?
I assume I think they're gonna do it on the earnings call, I believe. That's what it
Okay.
kind of looks like. I hope, yeah, it's at 5, I think. But I mean, I want to go and see all that stuff because yeah, so I mean, they're growing all this stuff like crazy and their Bitcoin mining revenue, yeah.
They I always get confused when they do this. So they're targeting 4.4 billion, like their 2026 ARR. That's essentially what they're gonna do in 2027, right? So they're targeting
Yeah.
like 4.4 billion next, or really starting in Q1.
Yeah, it's but the problem is it's basically because their fiscal year just ended,
Yeah, so
but
it's like
they're
from
basing it.
now on forward in the next 4 quarters.
And I believe though that 2026 is actually the calendar year whenever they're saying that is what I run my stuff off of. So that
See,
whenever they're
that
like
crap
weird
just
because
confuses me. Like, either
yeah, it's
like
always
change the
that's
fiscal year or like just go off, because that's what I just figure when I look at it.
no, that's why the math is always really, really weird with this stuff because you don't really know
But then
what in
you
the
also
world.
compare it to other companies like ARR for whatever year, but you really don't know when they're like when it's being lined up for. I just assumed it would go with their quarters, so I by in a year from now, we're looking at 4.4 billion in revenue, not by next
Uh,
December. So
yeah,
I'm
that's what I'm thinking, dude. I'm looking at that. I saw a dude today on X was like, if we get up to 90 a share,
Oh yeah, no, I saw that.
someone
I was like,
25K, dude.
that's not
Honestly,
happening, but I'll comment just to comment.
I was like, all right, I'll take a 25K if this actually happens. Dude, I'm just reading the chat right now, reading these messages. It's annoying because I can't see the chat messages, so I have to go back here just to go read them. So that's I apologize if I don't see your guys' chat messages.
No, you're good. My chat low key, unless if it's Hims or Zeta or SoFi, honestly, I'll get like a few people in there, but then other stuff, it's like I'll have like 200 viewers. Like right now, it says I have like 204 views, but like I don't get as many replies, which is okay because I don't cover it.
Oh, here's
I don't.
yeah. I can actually pull it up on my phone as I'm just gonna do, and then I can look at the chat like that. So I'm gonna go. But yeah, it's like weird. But dude, I think honestly, this earnings call, I wonder what they're gonna say. Because I mean, dude, they finally beat on their revenue in a quarter. So that's what you really, really want. I think honestly. Oh crap! I put this here actually down. Perfect. So I mean, they finally did a beat, and I'm surprised the market's not really loving this anymore. Let me go look up because I mean they went up to 41, but I think it might be something like an Nvidia yesterday where you wait for the earnings call, they come out, talk up, say,
Oh,
hey,
it
here's
says
what.
it right here, by the way. It says operating ARR of 1 billion is calculated as of August 26, 2026. 4 billion of ARR targeted to be operational by December 31st, 2026.
Hmm.
So it is
Yeah.
like actual year, not uh
Yeah, I
based off
think.
their fiscal year.
Yeah, because I think I mean because the way you look at it is, I mean, if you can get, I don't even know. I literally need to go harass.
And
I
they
don't.
keep
I have
saying
these.
4 billion, but I'm not crazy. It's 4.4 billion, right?
Yeah, I think it said 4 there, but dude, I
It's
don't know.
saying
Isn't
4 everywhere. That's why I'm confused and I'm wondering if this like it got pulled back to 4 billion or if they're just rounding.
yeah, I think they're just like probably around. I don't. They're probably doing something there. We'll see. I mean, 4 billion is realistically what I was actually projecting. I thought they could, but I mean, that's why it's gonna wait till the end of the year because so you think each Horizon, like so, say they have 75 from each it can do, right? So Horizon One up 75. If they can do a deal there, which I think these ones are contracted on all these old deals they've had, which I think is new Horizon. Everything it's put up, like 5 and 6 aren't contracted yet. That's
Mm-hmm.
whenever you're gonna get the um $20 million or 20 million per megawatt, 25. I mean, they eventually could go to a $30 million per megawatt with the way that the compute is being constrained in this today. And I don't know, I just think that I just want to see a diverse, honestly, roster of customers, and I honestly don't know if I really want to see a huge OpenAI contract because I think they actually are going to have problems
Everybody
funding them.
wants the small contracts now.
Yeah, exactly, which I like because I've been looking into those numbers, dude, and they look horrible for what OpenAI is gonna have to fund or anything. I hope everyone can see my freaking. I'm an idiot, dude.
Oh, you're just
I don't
saying
have
because you
my
don't
screen.
trust
I don't
OpenAI.
have my screen being shared.
You
I'm
trust?
sorry.
Do you
Now I
trust
have my
and?
screen,
Oh, you. Do you
dude. I
trust
don't think I have my
Anthropic?
screen. What?
Do you trust
What?
Anthropic?
Yeah, Anthropic. They actually are gonna be able to cover their. I'm sorry, everyone. I didn't have my screen on. Now I have my screen on. I messed up, but yeah, I Anthropic's fine. Anthropic actually is going to be able to cover their um obligations. Because OpenAI, dude, they're going to be like 200 to 300 billion in 2027 and then another in 2028 where they're not even going to be making probably over 100 billion dollars of revenue. So they're going to have to go tap the credit markets, and if OpenAI comes in there and say they can't do their contracts right with all these other people, like a lot of that is there are a lot of Microsoft backlog. What's going to happen is all of these places, you depreciation starts once everything starts operating with GAAP. So imagine you have all these companies like Microsoft and everything that has to go and start depreciation on their income statement whenever they get to earnings. Depreciation hits your earnings. But if you're not actually growing your revenues at a crazy clip like they thought they would, because they thought OpenAI was going to be out there and like giving them a bunch of money, paying them for that stuff, that's going to lead to a whole entire credit crisis because those companies also, all the hyperscalers are going to be taking out debt. And that's how you completely just get smashed and the whole AI revolution just goes down. That's the danger because AI is going to work. We are compute constrained, and AI does have good benefits every single day, and we need it. But it all comes down to it: can people pay it or not? Because if you can't pay, if you can't finance a credit, it could be like the great financial crisis where everything worked until it didn't. Because once credit dries up and you get on leverage, that's where it goes dangerous. But for right now, I'm just watching a lot of this credit default swaps on all these companies. Like that's why I can't even go and invest in CoreWeave really right now because their credit default swaps are blown out to like 800 basis points and it's ridiculous. So that's what I'm just kind of looking at. Even though these numbers are super bullish, it's just something to keep in the my pocket where I can't go too big of a position in Iren.
Yeah, I think like with like Open AI and them, like I feel like worst case scenario, you're gonna just see like companies like Microsoft take a bigger investment in them, or even like Nvidia. Like Nvidia has so much cash flow. If they,
Yeah.
I just don't think they'd let them fail
Yeah. Well, the problem is, dude, the
because I think you
biggest
have a
problem.
way bigger problem if they do fail.
Yeah. Well, the thing is, I mean, if they fail, it's going to be a crash because the problem is no one realizes this, but there's $3+ trillion of debt that's not on anyone's balance sheets right now. Like the debt, they're hiding everything. You know what they're doing?
What's that?
They'll go to a company and they'll say, "Hey, we need you to build a data center for compute, right? We're going to pay you $5 billion a year for the next 10 years, right?" That company then goes to the bank or a private credit fund and says, "Hey, we need to borrow money here right now. Microsoft is ready to pay us $50 billion over the next 10 years, right?" So Microsoft doesn't actually put it on their balance sheet yet. All they do is they go and they say we'll just pay you that 5 billion every year so it gets amassed in the future. So there's all of this debt that's actually not on any of these big companies balance sheets that no one's seeing right now, and that's what's the dangerous part. And that's what like Michael Burry's out there kind of trying to argue, which he's, I don't know, he I think he's way too early and his cases are just insane, and he's getting at he got so bad he had to buy calls in Nvidia yesterday before
Yeah,
earnings.
I heard he bought some. Uh,
Yeah, and
other
he's
stuff.
an. I don't know why he was short Nebus. You don't want to short these neoclouds. If you want to short CoreWeave, you might have a case possibly, but I wouldn't short them at all. I think it's stupid that
I
CoreWeave
don't
still is
like
going to be.
shorting CoreWeave because they have a crazy backlog and they'll probably be the first one profitable.
Yeah, the problem with them is, dude, they're just dead. Like, I mean, you look at it here, Iron. Like,
Yeah, but
I, it's
whether
just,
it's debt or you dilute, it's like you
yeah, it
know
is true.
they chose debt over dilution, and Irons kind of chose dilution over debt.
Mhm. Which, personally, I would rather choose dilution over debt because imagine, I mean, the problem is, dude, like
The problem is that
with
if
a,
something were to happen, stock were to crash, you can't really dilute. Like at least if
yeah,
you
you can't,
dilute, you don't have the debt that you're liable for, or as
yeah,
much, and then
yeah. exactly. Your share because I mean, Iron, bro, if they have $8 billion of cash on, I
You
need to
can always
see.
buy back. That's why I've also never understood the debt thing. It's
Exactly.
like buybacks exist for a reason.
Yeah, I need to see if they put out. I can't find their. I really want to see their balance sheet. Is what I really want to see.
Ooh,
Um,
Iren's.
I
Scroll all
don't
the way
think
to
they're.
the bottom.
Yeah, they're like, dude, they're weird with that stuff. They don't put it out that
I like
much.
the
I think they.
presentations. It breaks it
They
down
have.
super simple and easy when I don't know a company that well yet.
Yeah, I know. I
Like
okay. I
it's
see
different
what.
when I'm looking at my company and I already know the numbers I'm expecting.
Yeah,
But
exactly.
like especially when I'm streaming and I'm looking at a company I don't know, it gets
Hmm.
overwhelming to like because I don't want to like I don't want to feel like I have to entertain people, but then
Yeah,
also just like be locked in. Like
exactly. Yeah. So okay. So I'm looking at this, and so they have. Yeah, they have realistically almost $8 billion worth of cash here. And I mean, they own the land. Their assets are realistically probably more than their market cap right now. If we're being real, between all the debt, like everything that they own is definitely way more worth it than their market cap. Yeah, their debt. They're actually, yeah, their debt. It's not anything crazy there, which I don't mind. Um, they're
oh, I thought
definitely
they were done with Bitcoin mining. Do they still do that?
they were done with what?
I thought they were done with Bitcoin mining.
Well, they have to just phase it out pretty much.
Okay.
Because you can't, they don't want to just go from like 100 to zero. Because I mean, if they can keep a little bit of revenue
It
coming in
also
from
makes
it,
sense. They did still cut it in half too, so they're moving
exactly.
on pretty quickly.
Because I mean, then that means the more like, um, you know, what I mean, like less having to dilute or whatever in the future. So that's pretty good for them. But honestly, I'm very thrilled. I think with this, and I mean, bro, if they're the thing is, I people are just stupid with their cases they make. Oh, I hate Iron. Whenever they say, oh, they never sign deals, basically they just wait to sign deals until capacity is energized. And that's how you get these 20, 25 million per megawatt deals that even Nebus came in their earnings and was like, we're going to start waiting more to sign deals because if you have energized compute, you're going to pay more for something today than something in 5 years.
Well, I think it's what's kind of ironic about it is that's kind of been Iran's strategy the whole time, and they've gotten a bunch of crap out of it. But you heard Nebius already come out and say we can contract all of 2027, but demand is so strong, like we're waiting it out. And so now all these other um, neo clouds are catching on that if we wait it out, we can get more calls per megawatt, and these you know they like smaller deals, but if you're doing a 5 year deal, if you can wait it as long as possible, these deals are gonna look worse and worse as time goes on. So
Mhm,
why not wait it out as long as possible? It's different if it's like a 1 to 2 year deal. You're gonna be like making a new deal, like
mhm.
no, still very close in the future. It could be nice to just know you have it locked up in case something were to happen. But when you're in like Iron's shoes and okay, I like, making my deals 5 years length, that seems to be kind of what they tend to do. Although the recent one was 3 years, right? Um,
Yeah,
the one today. But yeah, if you can wait last second, get as much per megawatt, knowing that in 2027, 2028, people are going to be paying more per megawatt. Like, why not wait as long as possible?
exactly. And I mean, you're literally in no rush. And I think that's just a problem with people in the market is a lot of people don't have patience and can't sit in stocks for a while. And I think that's what makes Iron a hard stock. And that's why you see people losing their minds about it on X because it's like, I mean, like they said, investing is a game from passing wealth to from people who are impatient to people who are patient. If you go and you have Iron out there, investors like we want deals signed today. We need to see this in the future, and they can't trust the management, and they just come out and say they're horrible the whole time. They go and they short it, and they make their thesis about that, and it's just stupid. And I don't know. I think a lot of people. This stock is a really good stock to teach people a lot about the market and investing and everything that's going to be going on. So that's just my opinion on it. And if you got to, it takes time for patience. Like Rome wasn't built in a day. So I mean I think they've also alleviated a lot of the execution. Yes, I see someone said price tanking.
Yeah, it is
Uh
tanking. I have the price on my screen,
yeah, I don't. It's ridiculous that people
but
are
it's
saying,
barely.
"Oh,
It just broke
what?"
40. I said it only broke 40. By tanking, they mean like half a percent.
Yeah. That's not, yeah. I mean, well, dude, I'll take 35 if they want to tank the price down to 30.
Oh, I hope that
You'll
goes
see me
back
on
and
it right
touches
now. I will be
33.
buying more shares. So I hope they come out and they do something to tank whatever. But I'm interested to hear what they say in the earnings call, and I'm really interested on the questions. I think we're going to hear a lot of stuff about. I want to see what else people are saying on like X and everything here. Um, yeah, hopefully they're on right at 5, ideally. But I mean that's like a ridiculous. I mean they it's just a number play, and people just can't sometimes look at the numbers where you're looking at this and you see every hyperscaler says we're compute constrained. Every other company, and people just will sit there and like look at it and like hate the company. They'll just make up reasons. You'll be like, oh, they spent $50 million they gave to Stephen Curry. Like $50 million doesn't matter whenever a company is going to be $50 billion soon.
Yeah, that was one of those things where I didn't see the point in that or the marketing thing. And all that kind of
Mhm.
happened around the same time as I was also like, okay, 2026, like we're kind of like running out of time for a deal here. And which I knew they were waiting last second, but at the same time, I was looking at price action. And I'm not a trader, but at the same time, since I didn't have as much conviction, I don't know if I told you how I ended up getting in the stock originally, but I bought it at 18 just because I was like, oh, we need power, we need land. Like it was such a simple thesis, but then a week later it ran straight to 30. So it was never hard to hold it. And since it was never hard, I never really did a bunch of DD. I was just kind of like, yeah, like it's gonna win with the other neoclouds. So once it got to 60, I told myself I just wanted to swing off the momentum. And just looking at the chart, I was like, yeah, the sentiment's not that great. The chart kind of looks like it's dying out, so I sold. But now that it's been back down here at 40, I'm getting interested again, and that's kind of why I wanted to have you on here and then also see what they say because it's at the point where almost all the neoclads, like CoreWeave, also still looks good to me. Um,
Yeah,
so like
I mean,
I want to
they're
listen,
cheap.
hear what they're doing, know what CoreWeave's doing, and then like be able to make a decision within this next quarter because my prediction has been midterms, whether it's technically good for Iran since they already own the land or not. I think all of the neoclouds are going to get punished a little bit just off the talk of data centers in the political spotlight. So, I think in the next
That's
2 months I'm going to have an opportunity, and I feel that even more now that I'm seeing it not pump off this steep. So,
Yeah, I think no, I agree. I think definitely there's gonna be politicians gonna come out and trying to get votes out here saying no with this. And you're also gonna have stuff like that happen yesterday, which I tweet about, where JP Morgan comes in and goes, they're having a sell rating and a $46 price target on the stock, while they're literally doubling their position, which is crazy.
yeah, I
And
did see you post that.
people are just going to get baited into this. It's what's going to happen. People are going to say, "Oh, JP Morgan doesn't like this stock. They're saying sell it, so let me go sell it." All the time while they're just buying up shares of the stocks. And all the institutions do this all the time, and everyone always gets caught in this trap.
Yeah.
Yeah. I mean, it's going to be easy. It's going to be like you said, it's going to tank because people are just going to be watching the news, be like, "Oh, I don't think Iron's going to do good because they're hammering down on neoclouds, not do any of the research into them actually owning all of the land and like having everything already contracted and all the permits to do this." So,
I have a quick question
I
for
think,
you. I'm
yeah,
trying to find this call before it gets too close. I don't see it. I see
it's
the full year 2026 results 2 times. Oh, it
let me
says to
see. Okay,
release, and then it says the actual results, but I don't see anything about
yeah,
a call.
you see the call. I saw it also somewhere. I need to make sure I have this up. Yeah, like I think it's fine. Let's see what they have going on right here. I signed up already for it. Yeah, I have it pretty much already ready here. So it's like go back and I signed up. I actually don't remember where I found it earlier today. It's in there. Just look up Iron earnings call and then just look it up online. It usually comes up is what I do.
Oh, so you don't find it on the website?
Yeah, sometimes I don't even be. Sometimes they're such a pain to go and use and figure out whatever. But yeah, that's also I think that's what I usually do. I also do. I mean, I'm looking at analysts and what they think, and bro, I mean, it's just crazy that you're gonna have a company that's going to grow revenue at over 100% CAGR over the next few years. Like, bro, analysts are also so low in this stock. I'm looking. This is what's gonna happen. This is insane, right? So analysts have them at their base case of revenue is $2.8 billion in their fiscal year 2027. 5.4 in 2028. This company, if you do the math, they're going to do at least probably, I mean, not $4 billion of revenue in 2027 because you have to think they get a little boost at the end. So analysts are going to be out here. They're going to be low by 40% on them, in my opinion, for revenue.
You said 5.4 for 2027?
2028, 2.815 billion is what analysts have Iren doing in
And how
2027.
many gigawatts do they have live right now? Like
I I need to
1.3?
check. Yeah, I think they have.
I could be
I don't know.
making
I
up
don't know if they have,
numbers.
but it really just depends on whenever those horizons get up. If they do that, then they'll have 200 um, megawatts right from there. I don't think they even have a. Oh, you mean they have like they own right now?
Yeah, like that's like
Yeah,
built
that's
out.
right. Yeah, some people are talking in the chat. They said they're asking who in the world is the leading frontier AI lab. I agree with whoever just said that in the chat. I think they actually will probably put it in on the call. And if it comes out and it's like Anthropic or something, that would make probably the stock price go pretty ballistic. But
Oh,
I
I
mean,
thought
dude,
that
this is
was the company.
yeah. I think that's what I think everyone's kind of because I mean I don't know who else it really would be, but dude, I mean you go and you look at this.
Because why wouldn't they
I
just say Anthropic? Why would they?
I don't. They just I don't. They were like weird with that stuff. I don't know if they would. They just want to surprise people because they were worried about
Uh,
like earnings they might not hit, and they wanted to come out and announce something really good and say that. That's maybe what they
and
could.
they thought it was better than what they did the last time, waiting to. They did the Nvidia stuff, but then nothing was. They like didn't show the results or something.
Yeah, something like that. I mean, dude, I'm just thinking also. Like I don't listen to analyst price targets. I think there are a bunch of like they just put random stuff out there. Whenever the stock goes up, they raise it, and they do stuff to go and freak out investors with the algos. Like they know what they're doing. But if the Iron's gonna come in and beat their revenue by like 30-40%, right? If analysts are basing their price target off of revenue at 2.8 billion, what if they have to move up their price target by 40% because revenue goes up by 40%, or even 50% because revenue is growing faster? So if you're growing revenue faster, you should have a higher valuation multiple. So realistically, their 12-month target probably is going to be, they could be around like a 3x, which is crazy
Yeah, I
on
remember
their 12.
calculating it out. I mean, and you also got to think like price per megawatt keeps going up. So,
Exactly. And
and
that
they
means they're
want
more
like 5 megawatts live by 2028. And I have to remember what my post was by. I'm pretty sure they only are gonna have like 1.3 gigawatts. I could be wrong. I have to look, but
Dude, I think they put it. Okay, wait. Let me go and find it on their website. I believe they have it on their website. Where in the world did they put something here? Okay, so they're targeting 4.4. Let me see what
'cause I
where
don't like that they
they.
don't clearly put like after this deal are all the gigawatts or megawatts filled now for 2026.
I think they're. I think almost. I think they still have room as well. That's what I'm because I know
Yeah, they
last
had
time
a
they.
little bit of room. I think they had like 72 megawatts left
Yeah,
until
I think. Hmm.
recently.
Yeah, I don't. I think they have. It's probably so 4 billion would be. Yeah, it's probably it's probably 90-95% if I had to guess sold out. Um, And I think they're going to start. I mean, we're probably going to get deals probably later this year. Also, is whenever the next ones are going to come out because they're going to be like, all right, we're going to start energizing this stuff early in 2027 for all that construction and whatever there. So I think that's what we're going to get more deals. And I think they do like want to get a little bit more because if you get more deals, then you're going to have less dilution with the company because you just have all that extra cash you can pay for everything. Um,
Wait,
so that's what
so
I'm.
it does also say executing global expansion over 5 gigawatt data center pipeline. It says targeting cumulative delivery of approximately 2026 says zero point 0.3 gigawatts, and then it says 2027 0.8 gigawatts. It also says IT around that, whatever that is. But
Yeah,
I'm
it's
wondering if they have zero point 0.3 left. No, are they saving that for IT, like for them?
yeah. I think where do they? Yeah, it's probably. Can you repeat that again?
It's on slide 2. It
Slide two.
on the
Second.
news release. It says
Uh,
executing global expansion across 5 gigawatt data center pipeline.
Okay, yeah, I guess 0.3 is what they're gonna do. So I mean, technically, you could split it and say they can get up to, yeah, because it's
To
halfway
300
through the year.
megawatts.
Yeah, because you also have to think though, the first megawatts that they're doing is gonna be at a less million per megawatt because it's gonna be back with those Nvidia contracts and the Microsoft ones where
Yeah.
those were like 9.7 per, like very cheap, just to get the contracts down and show that to people. So if they can do that between the two, say they go 0.55, right? So let's just say let's go here, just do some quick math. So 550, right? So they have 550 megawatts, and say they go and they can get up to like an average like 15, right? So 550 times equals 550 times an average of 15 millions per megawatt. So that would realistically be right there, which I don't know. They like saying these numbers are gonna be low? Or are they saying that these are gonna be older deals? But if they were at 15 with that, that would be probably 8.8 billion in revenue, which that seems high. So I don't know, because I mean, point even if they go point, so let's just go on the lower side and say they have 400 megawatts up times 15 million. That equals $6 billion. $6 billion of revenue, which would be what I have
Right.
somewhat like up here. So so I mean, dude, they do 6 billion? I mean, bro, if they did 6 billion, that'd be crazy. But they're guiding for four. Maybe they're being conservative, but that's what I'm just kind of thinking. That the numbers are getting
And is
bigger
there
and bigger.
four though? There four. That number might be for fiscal
Yeah, it might be because I think that number's for the calendar year, but I mean, I mean, I guess they're pricing his numbers in at like maybe they're actually these are just all with the Nvidia and the Microsoft deal, and those ones in the future are going to be whatever. But I mean, realistically, all they need to do is just have they just need megawatts out there. And oh, dude, they're going down a lot, bro. They're down to like 39.53. That's kind of crazy. Now they're starting to get hit, which honestly, before they even call, I might honestly just, I don't
year.
know. Let me
Buy
see.
some.
Dude, they're at 30. They're still like 40, which,
I've
yeah, they're
never
like,
bought an after hours ever in my life.
you what?
I've never bought an after hours in my life.
I, dude, I really like it because you can
Does
just, because
Robinhood
there's so
make it
many.
easy? Like, do you literally just go and buy like its open
Yeah,
market?
you don't have to do anything. It's so easy. You can buy before the market and all that stuff. And what I think honestly happens a lot is whenever there's less liquidity and institutions are like, crap, we got caught off sides and they didn't do enough buying, they're just gonna have the algos go and tank the stock price to get out all these weak retail hands. And then they just go and they buy down there and then it pumps the next day. Like that's why Nvidia, that's my hypothesis on why stocks always have really good earnings. They'll drop and then they'll pump the day after, like Nvidia did, like Zeta did, like Elf did,
I
because
really wanted to buy Zeta on that dip, but I honestly like I know like in the past, like when you did that, you had to like actually call your broker. And the fact that there's always been like low volatility in those instances, I didn't like actually it always just sounded too good to be true, so I never even attempted. I just figured I'd get
yeah,
rejected.
no, I think, and it's crazy because like, yeah, I think literally that's what happens every single time. So could this happen and we open up huge tomorrow green? Like realistically off this report, we should be up 15%, 20%, 25% with what we did today. I mean, them beating revenue was a shocker. No one thought they were going to beat. Um, they basically have everything contracted. The millions per megawatt are going to be going way up, way higher than their other contracts had. So if you're looking at this, it's a pretty clean report and maybe the first one ever that this company really ever is having.
Yeah.
So, I mean, that's what I'm just looking at. I think is crazy for them because that's just my thoughts and my analysis and everything that's going on. So I'm gonna post it on X.
Yeah, I'm looking forward to this call. I think a lot of my questions are going to be answered just by like seeing the presentation, and also just seeing him like explain it. Like I assume he's going to bring up however many, if they have more gigawatts still left for 2026, or if it's all contracted. Um, I'm
Yeah,
sure they'll further talk about their future pipeline and a little bit about their strategy. I hope, because that's one thing I didn't like in the past. Is I felt like they kept their strategy pretty hidden. I'm hoping he's more vocal about
yeah. I'm pulling this document up because I want to take if I see anything crazy during the call, then I want to just listen, just take some notes or whatever on it. I'm about to post this on. I think they're about to be on at 5. They should
Yeah,
be.
they
Which one
should
do
be on in 2 minutes.
which I don't. I mean, I don't know if they're gonna be on time. Whatever. I mean, you should probably be on time, but who knows? Maybe you can get in. Let's see what it says. You can. Can I get in? Okay. So it's not available yet. So yeah, I'm just gonna keep refreshing it at 5 and say we got. But I actually think they're gonna come out, and I hope they come and they do some like stock price pumping on the call. They should after this report they did.
Yeah.
But because I
Are
mean, the
we able to?
expectation.
Does Discord let us mute each other?
Let me see.
That way, we people like are. It's not playing both our sounds. Like I know,
Hmm.
I
I don't know, dude.
yeah, I can click mute on my mic here. Yeah.
How do I do that? I don't even know how I'm in the call. I can't even get into the call. Oh, here it is.
I have the
Oh, yeah.
mic button, and I just click it.
I'm honestly just gonna mute my mic and get ready for the call and just yap now.
All right, I'll do that. All right, call starting here in a few. I make sure that's up to date and not behind. For whatever reason, it was like, okay, why is it counting down from 15? Anyone else see that? It's counting down from 15. I don't know if that's just a thing they do. We'll find out here soon enough. It's 5 p.m. though. Let me refresh. Okay. Now I'm low-key wondering. Joseph, is your video counting down from like 15? See if he's still in here. Alright, I'm muting myself. I don't want him to. If his thing's actually working, I don't want to be talking over it. But I don't know what's going on here. Full year 2026 stops. Oh, you can type questions? I did not know that. Come on. Let me text him. Let me text him and make sure. Your stream is your live stream. Down from 15 minutes. Oh, nope. Okay, it's good now. Turn the music off though until they start talking. All right, leave in the comments what do you guys want to hear. What are you guys most excited for? Um, for me, I'm most excited to see what he says in this deal right here. Um, I want to know if they have any gigawatts left or if everything's contracted now for the year 2026. Um, and yeah, I also want to hear future strategy around these deals. I assume they're going to continue waiting and holding out till last second, but any update on ARR? Because I was confused on why it says 4 billion now instead of 4.4, in which I thought it was before. So I'll be curious to hear about that. Um, and we should be getting some more information on the 2027 guide. So that would be nice too. But that said, hopefully this thing.
Results
Oh, yep, it's going
after
now.
this. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be question and answer session. To ask a question during the session, you will need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press star 11 again. Please be advised that today's conference is being recorded. I'd now like to hand the conference over to your first speaker today, Mike Power, Vice President, Investor Relations. Please go ahead.
Operator, good afternoon and welcome to Iren's FY 2026 results presentation. I'm Mike Power, VP of Investor Relations, and with me on the call today are Daniel Roberts, co-founder and co-CEO, Anthony Lewis, CFO, and Kent Draper, Chief Commercial Officer. Before we begin, please note that this call is being webcast live with a presentation. For those dialed in by phone, you can elect to ask a question through the moderator after our prepared remarks. I would like to remind everyone that certain statements made during this call may constitute forward-looking statements. Those statements are based on current expectations and assumptions and are subject to risks and uncertainties that could cause actual results to differ materially. Please refer to slide 2 of the accompanying presentation and our SEC filings for more information in that regard. With that, I will turn the call over to Dan Roberts.
Thanks, Mike, and thanks everyone for joining us. So Will and I started this business on a pretty simple observation. The digital world scales almost instantly. The physical world does not. Power, land, data centers, these things take years to permit, finance, and build. And this was the year that stopped being a thesis and became the defining constraint of the whole industry. So if we look at the chart on screen, across 8 models tracked by OpenRouter, weekly token usage across large language models increased nearly 17 times in 8 months. Every one of those tokens runs on physical infrastructure. It is very difficult to serve demand shaped like that with infrastructure on 3-year lead times. And this is the start of the cycle, not the end. Cheaper compute doesn't make existing things more efficient. It makes new things economic. Infrastructure enables applications. Applications create demand for more infrastructure. Every build out in history has worked this way. And that's the structural disconnect, and it's only getting wider. So let me walk through how we're set up against that backdrop. So we operate across 3 layers from the bottom up. So first of all, the data centers, the land, the power, the substations, the cooling. Arguably the hardest layer to build, and that's where the shortage begins. Then the compute, the GPUs, storage, networking that go inside the data centers. And then finally, software on top, the managed services and enterprise support. That's where Mirantis lives for us. And just today, Mirantis was named an inaugural NVIDIA certified hypervisor. So we've now got NVIDIA validation at the software layer as well as the hardware. Why own all 3? Because each layer makes the one underneath it worth more. A grid connection is worth more with a data center on it. Worth more again with GPUs inside. More again with services wrapped around the customer. Most of this market rents at least one of those layers. We own the entire stack. So here's how the year went. Just move on to highlights, please, operator. Thank you. 4 things to take away from this update. And I'll be quick because there's more detail coming a little bit later. So firstly, customers. New multi-year cloud contracts including Cohere, Prometheus, Perplexity, Figure AI, Fowl AI, Higgsfield AI, and separately, a leading frontier AI lab whose name we're not able to disclose just yet. Revenue, $4 billion of ARR is now contracted for our 2026 capacity. And 1 billion of that is operating today. This does not include revenue expected to ramp in 2027, such as the $700 million of ARR associated with our NVIDIA cloud contract. Delivery, Horizon 1 was delivered to Microsoft this month, the first of 4 50-megawatt deployments, with Horizon 2 through 4 targeted for the December quarter. And finally, funding. $6.5 billion of GPU financing now in the past 3 months. With prepayments, that's more than 100% of the associated GPU capex funded. And 2.8 billion of it needed no investment grade offtake and still priced in the single digits. So let me start with customers because everything else follows from them. Our 2026 capacity is largely sold out. So the questions we get now are all about 2027 and 2028. We're continuing to contract future capacity deliberately. Every contract opportunity gets weighed on 3 things. Firstly, who and what does this counterparty add to the platform? The strategic merit, not just the revenue. Second, what are the economics? Price, prepayment, term, etc. And thirdly, what might it open up longer term for managed services and software? We've been saying this for a while now. Signing deals is not the bottleneck in this market. Bringing GPUs online is. We also don't need an investment grade offtake to fund GPUs anymore. So we're not chasing headline announcements. We're making long-term decisions about where we want this business to be. And when we'll sign, we'll tell you. We're in late stage discussions with a range of new customers over a significant portion of 2027 capacity, and 2028 conversations are well underway too, both on customers and financing. Longer term, we want to keep building a deep, diversified base of customers across the AI ecosystem, all who have master service agreements with Iren. Every megawatt we build is scarce. Before every new cluster switches on, we want it in demand from both existing customers and new ones. So not dependent on any one customer, any one negotiation, or any one point in a pricing cycle. And here's who's on the platform today. So as I mentioned earlier, the headline is the new multi-year contract with a leading frontier AI lab. And to be clear, this is a new contract. It's separate from Prometheus, who we can now name as the unnamed AI developer from our July announcement. The most sophisticated buyers of AI infrastructure in the world keep choosing us. It also shows the strategy is working. We started concentrated because big customers with immediate demand were the fastest path to scale. As the platform's grown, we've deliberately broadened. Hyperscalers, enterprises, AI developers, now frontier labs across both training and inference. But honestly, the part we care about most is the third bullet point. Existing customers keep coming back. Together AI and Fireworks AI have both renewed and expanded. New logos are proving demand, whereas renewals continue to prove ongoing delivery and ongoing execution. Once we've deployed with a customer, we grow with them across sites, GPU generations, and service levels. And in terms of who is signing and growing with us, Prometheus and Figure are building products for the physical world, robotics, real-world automation, and they're contracting our compute to do it. AI is moving well beyond chat. This is the thing we keep telling people. You cannot size this market of today's usage. And that is exactly why the market keeps getting caught structurally short of compute. Now let's move on to pricing. So pricing has moved a lot. 3-year contract pricing is up about 125% since November. 5-year is up about 70%. Recent 3-year contracts are pricing in excess of $20 million per megawatt of IT load, paying back the compute investment in around 2 years, while active discussions are now at around $25 million per megawatt. Recent customer prepayments are funding 45 to 55% of the GPU capex. What's behind that? The market's tightened, no question, but it's also who we're signing, how the deals are structured, and what we attach on top in managed services, which Mirantis keeps expanding. Shorter duration and on-demand sit above that as further upside in due course. Revenue per megawatt is shorthand, by the way. We look at the whole return: price, term, prepayment, utilization, customer quality, and expansion opportunity. And to be clear about what we're not doing, we're not sitting on capacity to time a spot price. We allocate capacity to build the customer base and the platform as we see fit. The pricing follows that. Okay, so from customers to what we're building. The targets: roughly 300 megawatts of IT load delivered in 2026 and another half a gigawatt in 2027. That'll take the platform to around 1.2 gigawatts in 2027 of gross capacity. And we're continuing to build across Texas, British Columbia, Oklahoma, South Australia, and Spain. And right now, today, there are more than 4,000 people mobilised across our active sites. The best example of that today is Horizon 1. So, as we announced earlier, Horizon 1 was delivered to Microsoft. First of 4 50-megawatt liquid-cooled deployments at Childress, and it achieved NVIDIA Exemplar Cloud status on GB300 NVL72, which matters because it proves we can integrate and operate the full platform: hardware, networking, and software, not just build the shell. The delivery matters, but the template matters more. Every Horizon uses the same design, the same supply chain, the same site team, and each phase carries the lessons of the last. Horizon 2 is in the process of working towards commissioning. 3 and 4 are in late construction. So all 3 are targeting delivery in the December quarter. And that approach is running at every site. So quickly on 2026. At Childress, retrofit work and GPU installs are running in parallel on the air-cooled cools. At Mackenzie, GPUs are being racked across the first 2 buildings. At Prince George, the air-cooled fleet is now fully commissioned and liquid-cooled installation is underway. All of that remaining capacity is targeted for the December quarter. Then 2027. Sweetwater 1 is in full swing now. First building is going up. The primary substation is progressing. At Childress, Horizons 5 and 6 civils are now moving and underway. And another 250 megawatts of air-cooled conversion progressing. And it's also worth mentioning in terms of Canal Flats, we've now decided to convert all of that to liquid cooling for GB300s. And that will deliver more value from power and a site we already own. But beyond that, the pipeline steps up again. 2028. Sweetwater 2 and Kiowa in the US, Bundy in South Australia, and Badajoz in Spain, roughly 300 megawatts, and the flagship of the Nostrum portfolio of sites we closed during the quarter. All up, more than 5 gigawatts announced, with a multi-gigawatt development pipeline behind it, including more Texas power, where a tighter interconnection process should favour real and well-capitalised projects. And then a quick word on design, because it answers a question we're starting to get a lot. So the bear case we hear on this industry is that AI data centres get rebuilt in 10 years. We've spent this year making sure that ours don't. Sweetwater 1 is becoming the reference design for Sweetwater 2, Kiowa, Bundy, and what follows after those. Common layouts, common equipment, more modularisation and prefab. Each project is inheriting the last one's lessons instead of starting from zero. And the design is built for successive GPU generations, evolving cooling, including 800-volt DC, all of which has been developed in collaboration with NVIDIA. So we know compute changes faster than buildings, and ours have been designed to adapt to that. But we're also getting more out of what we already own. Our existing sites have spare power beyond current deployment plans. That headroom can support more GPUs and more revenue without the need for any new grid capacity. And new grid capacity is the scarcest input in this entire industry. So revenue that doesn't need it is about the highest quality growth there is. First up, new liquid-cooled installs at Mackenzie, Canal Flats and Prince George in 2027. And over time, tools like NVIDIA Max LPS, which smooths GPU power draw, let us safely run more compute inside the same electrical envelope. But none of this happens without people. Our headcount nearly tripled in FY26, including hundreds of colleagues who joined through Mirantis and Nostrum, and we expect similar growth again in FY27. 5 C-suite appointments across development, product, marketing, innovation, and information security. People from NVIDIA, AWS, Oracle, Google, and other leading data center operators. So building our organization ahead of the revenue is obviously deliberate. It costs money before it makes money, but this is where we're going. One last piece before I pass off to Anthony is how we're funding this growth. So GPU financing first, because now the model is proven at both ends of the credit spectrum. For the Microsoft contract, we raised $3.6 billion of investment-grade GPU financing at a weighted average of about 6%. With customer prepayments, that funded about 96% of the associated GPU CapEx. Now, here's where it gets really interesting. For non-investment grade deployments, so the rest of the AI ecosystem, we just closed $2.8 billion of equipment financing. That includes $2.4 billion at a 9% fixed rate for Mackenzie, led by Blue Owl and funds managed by PIMCO. A delayed draw term loan alongside senior secured notes, funding 90% of that GPU CapEx. Add prepayments of 45 to 55% on recent deals, and total funding well exceeds the cost of the underlying GPUs, which is good because that excess is now helping to support data center CapEx on those same and future deployments. And to date, talking about data center CapEx, we have deliberately kept 100% of our data centers unencumbered, which is a growing asset base we can finance when the timing is right. So on that note, Anthony will take you how that funds the plan and the results. Thank you, Anthony.
Thanks, Dan, and good evening, everyone. Over the past 12 months, we have secured circa $19 billion in funding, nearly $16 billion across customer prepayments, GPU financing, and convertible notes, alongside equity of approximately $3 billion. The vast majority of this funding is either in cash or yet to be drawn down, giving us significant capacity. For FY27, we're guiding CapEx of approximately $25 to $30 billion. Included in that estimate is delivery of the contracted Microsoft capacity, the other deployments to deliver on 2026 ARR, and GPU and data center CapEx for air-cooled deployments scheduled across calendar year 2027. It will also support new liquid-cooled data center capacity at Childress and Sweetwater 1 for delivery in the second half of calendar year 2027, as well as earlier stage investment for 2028 and beyond. Of course, the actual CapEx for the year will depend on a range of factors, including final costings, construction schedules, delivery timelines for GPUs and long lead items, the overall contracting environment, and the overall fundraising environment. Within that CapEx estimate, we expect data center and CapEx GPU requirements to be up approximately 15 to 20% for ongoing and new deployments. with revenue increases expected to ultimately outpace those increases. In respect to the funding plan, as noted earlier, we have a strong starting position. Approximately 14 billion of existing cash and committed GPU financing and prepayments. That includes 7.6 billion of cash on the balance sheet at 30 June, of which 1.7 billion is restricted, with most of that 1.7 billion set aside to fund Microsoft GPU CapEx. We're targeting roughly an additional 8 billion of GPU financing and prepayments in support of GPU CapEx requirements, noting the healthy prepayments that we are seeing in recent contracting and the growing market for GPU financing that Dan has spoken to. The balance of the requirement we expect to meet through data center financing, operating cash flows, and corporate sources. On data center financing, as Dan has spoken to, our entire data center portfolio is unencumbered today, including Horizons 1 through 4. So there is obviously a significant and growing asset base to raise asset finance against. Alongside the growing market for GPU financing, attractive customer prepayments, we feel well placed to scale our fundraising efforts to support the rapid growth of the platform. Now turning to the Q4 results and outlook. The quarter's results continue to reflect the ongoing transition to AI cloud. For the June quarter, revenue was 137.2 million, including AI cloud revenue of 70.5 million. This was down 7.6 million compared to the prior quarter as we decommissioned mining hardware ahead of GPU installations, partially offset by AI cloud growth. Cost of revenue also fell 6.6 million, mainly as a result of lower electricity usage from reduced mining activities. Net loss was 684 million for the quarter, largely driven by non-cash impairments of 450.4 million, mostly on account of decommissioning mining hardware, plus a 102.1 million decrease in fair value of mining hardware held for sale, both reflecting costs of transitioning our existing sites to AI cloud. We currently expect mining operations to be effectively decommissioned by the end of December 2026. We expect first quarter cash SG&A to increase approximately 40 to 50 million sequentially as we continue to invest for growth across sales and marketing, R&D, development, site and cloud operations, and other functions ahead of significant revenue growth over the coming periods. Which brings me to ARR. We exited Q4 at roughly $500 million of ARR. It's 1 billion today following acceptance of Horizon 1 by Microsoft, and that will carry through to the end of the September quarter. And we expect more than 4 billion of ARR by the end of the December quarter, which is already under contract and includes delivery of Horizons 2 through 4. A significant amount of the December capacity is expected to come on late in the quarter, so we will see the reported revenue effect come through predominantly in the March quarter. With that, I'll hand back to Dan.
Thanks, Anthony. So just one slide to close on. 2026 is largely sold out with the 4 billion of ARR now contracted. 2027 and beyond is deliberate runway for us. So this is capacity we're continuing to convert into a broader customer base and, of course, a richer service mix. Revenue per megawatt is rising, both on structural demand as well as site optimization, and that $4 billion comes from less than 10% of our 5 gigawatt plus portfolio of secured grid connections. So 8 years ago, we set out to solve the gap between digital demand and physical supply. I think it's fair to say the gap is here. We own the power, we own the land, we own the data centers, we own the compute, we own the people, the software, and we have the people to service it. So for Will and I, this is only the beginning. But operator, let's open the line for questions, please.
As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. A moment for our first question. And our first question comes from the line of Mike Ng from Goldman Sachs. Please go ahead, Mike. Your line is open.
Hey, good afternoon. I just have two questions. First, I was just wondering if you could talk a little bit more about Mirantis and how it helps facilitate the commercialization of your compute. Was Mirantis used or helped to enable any of the signed or in negotiation deals today? Do you think you'll eventually use Mirantis to help sell some capacity into market aggregators like OpenRouter? And then I have a quick follow-up. Thank you.
Yeah, happy to jump in there. Thanks for the question. In terms of the Mirantis service offering, I think there's a few elements to that that help with our business today. Firstly, as you identified, it opens up effectively new customer classes to us. As we've spoken about at length previously, very large hyperscaler or frontier AI lab customers generally like to take compute on a bare metal basis, but smaller AI developers, labs, enterprise customers value having an orchestration layer offered over the top of bare metal compute. And so the Mirantis service offering, as it relates to that orchestration layer, can help open up that part of the market to us. In addition to that, it does give us the ability to provide compute in a different manner. So not only can we provide reserved managed services clusters, but it also opens up the potential for us to provide on-demand compute as an example. In addition to the orchestration layer itself, Mirantis has a long track record of servicing enterprise customers in the cloud computing space, and they bring a number of other areas of expertise, including enterprise support, monitoring and deployment capabilities that can help us monetize our platform more quickly and continue to provide very high levels of customer service. So those are a few of the areas where Mirantis adds to our existing platform.
Great.
And I think
Thank you, Ken.
maybe just
and then,
maybe just to add to that, I think we're now the only NeoCloud certified hypervisor from NVIDIA as a result of today's announcement. So that kind of vertical integration, that full stack, is playing out live time.
Thank you, Daniel. And I just wanted to follow up on the CapEx outlook for next year, $25 to $30 billion. Is that all to support the 800 megawatts that you expect to contract next year, or is it beyond next year? And then could you maybe just talk about the financing plan beyond the $14 billion of cash, GPU prepayments, and other debt financing that I think you talked about?
Sure. Just in terms of and thanks for the question. Just in terms of the first question, so the 25 to 30 billion is obviously covering the financial year to June 27. So that covers all the CapEx requirements for the 2026 deployments that contribute towards the 4 billion ARR target. It covers expected data center CapEx and GPU CapEx for sort of air-cooled, the balance of the air-cooled deployments expected to come over the course of 2027 calendar year. And it also covers a significant portion of CapEx required for the liquid-cooled deployments in the second half of 2027 calendar year. It doesn't include CapEx requirements for the GPU compute for those new liquid-cooled facilities, which will be part of the following year's capital plan. In terms of financing, obviously we spoke to the 14 billion, so that's secured. I also spoke to 8 billion estimated of additional GPU related capex. So that will be supporting the GPU deployments included in that 25 to 30 billion. Obviously, we've seen a very strong fundraising prepayment environment, which obviously contributes to that $8 billion number, and we've seen strong conditions, obviously, in GPU financing. Obviously, Dan spoke to the results that we've seen in the recent transactions, but there's obviously also been other transactions in the market, both for investment grade and sub-investment grade clients. We've also had the recent announcement by NVIDIA alongside 6 of the biggest capital allocators in the world, announcing JVs, partnerships to support further financing of AI compute as an asset class. In addition to that, we obviously have 1 to 4 substantially built and being delivered over the course of the year. That's obviously unencumbered, as well as other opportunities we're looking at, both asset-backed and other group-level initiatives as well.
Great. Thank you for the clarification.
Thank you. We will now take our next question. And our next question comes from Paul Golding from Macquarie. Please go ahead, Paul. Your line is open.
Thanks so much for taking the question, and congrats on all the tremendous progress. I wanted to first ask about the British Columbia liquid cooling pivot, and wondering if you could unpack that decisioning process a bit. Sounds like there's excess power available, and there's obviously a revenue opportunity, but was wondering how you were thinking about the relative return there, and if that was organic or from demand that you've seen, or speculative. And then I have a follow-up. Thanks so much.
Primarily, Paul, it's driven by demand that we're seeing, and we do have a design that is very effective for the conditions that we see in British Columbia for liquid cooling. It is something that increasingly, as customers are looking towards future workloads, we do see the vast majority of customers over time looking towards liquid-cooled GPUs. And so we are certainly reflecting that in terms of the mix within our portfolio.
Great. Thanks so much, Ken. And then Anthony mentioned that the compute costs that are rising are being more than covered by revenue increases. I was wondering if, given the continued march upwards of compute cost, what the calculus is and your thought process and strategy around taking some of the excess liquidity from prepayments and the financings that you've done and allocating that towards data center build-out versus maybe longer dated compute purchasing, given, and maybe on a speculative basis, given that price trajectory we've seen in compute. Thanks.
Yeah, I think in short, we're doing both. So as Dan mentioned, this is, you need all the layers in the stack in order to be able to sell compute. You have to have the data center capacity, and we continue to see extremely strong demand within the industry and a lack of capacity available to satisfy that demand. And so we will continue to build out data center space. We will continue to make compute purchases over time and continue to add that software layer over the top to be able to expand our addressable market and secure better economics over time. So we expect to see a mix of purchases on spec, as well as some purchases that may be tied to customer contracts. But as Dan said, the contracts are not the driver in this industry. It's getting the compute online. And so that is what we are heavily focused on the execution side of the business.
Hey, Kent, for Paul, I might also just add to your CapEx question around that revenue, and it adds a little bit more to what Anthony said earlier. So if we step back and look at this revenue capex trade-off, the contracts that we're announcing now and the pricing per megawatt relates to GPUs that were ordered quite some time ago. So arguably they're reflective of natural price increases beyond capex inflation on those GPUs. Now, future generations of GPUs and costs are going up, but we didn't have to pay the cost increases on the revenue per megawatt that we've announced today necessarily, because they're the older generations, if that makes sense. But there's also a bit more nuance to our capex needs. So yes, we've guided total capex of $25 to $30 billion for FY27, but that we deliberately don't split it in or attribute that to a specific number of megawatts of IT load coming online, because the reality is that data center capex is running a year or two ahead of delivery. But that's the nature of substations and steel. So the mix in any given year is really a function of what we're delivering that year versus what we're building for the next one. So I think we are working on how we stagger data center capex and how we finance data center capex. As we mentioned during the presentation, 100% of our data center portfolio today is unencumbered, which creates a future opportunity. And when we're receiving prepayments equivalent to 50% of the GPUs, that's roughly equivalent to 100% of the data centers, because GPUs are roughly 2/3 of your fully loaded cost for the data centers plus the GPUs. And if you're financing the GPUs at 90% gearing already, then you can see how you've got this funding flywheel that's emerging that requires arguably little equity over time to finance it. But we've then got to overlay our ambitions are growing. We're building at a higher cadence to what we've done in the past. So those funding needs continue to grow. But we've got flexibility around growth based on optimizing the funding that's available to us at any point in time.
That's great color, Dan. Thanks so much. Maybe just a quick housekeeping question on the back of that, if I can sneak this one in. Just on the 2/3 compute versus data center capex, is that shifting at all with the increased cost of compute, or is the labor market being tight and other inputs on the data center construction side keeping that equation relatively stable? Thanks.
No, it's staying pretty stable. I mean, we're seeing inflation and costs across various components continue to tick up. So at a material level, I would assume that ratio stays relatively consistent.
Great. Well, thank you both.
Thank you. We will now move to our next question. And our next question comes from Brett Kuplock from Cantor Fitzgerald. Please go ahead, Brett. Your line is open.
Guys, congrats on the quarter. Great to see kind of demand trends around 26 and certainly 27 and 28. I'm curious, kind of following into Horizon 1 build out. We've seen a lot of deals recently with maybe lower PUEs. Are you seeing any design changes that might allow for lower PUEs at other sites that you guys have coming online, or other buildings coming online in 27 and 28? Or should we kind of think of that PUE with the Microsoft deal being somewhat static?
I mean, PUEs are never entirely static, but they are largely driven by the nature of the ambient conditions in which your data centers are operating. We've spoken before that we use a highly efficient closed loop liquid cooling system. And that means we have very effective PUEs relative to the broader industry. We do see some continued improvements over time, and part of that is driven by items like NVIDIA's DSX reference architecture, where they have looked at how you can operate chips at higher temperatures without giving up any performance on the computing side, but allowing you to direct more of your overall megawatts towards the IT load and away from cooling. But those are around the edges rather than being really material drivers of decreases over time.
And I think just to add, we've been deliberately conservative on the headline PUEs that we've advertised. We even had a slide dedicated into the deck to this thematic, which is we have spare power beyond our current deployment plans, and some relates to optimizing this PUE over time. The reality is the average PUE for a year is substantially below the maximum PUE that you require. So there's a few little tweaks that you can make that free up quite a lot of power capacity alone. We've then got the NVIDIA DSX Max LPS opportunity, and we're aware others are using power management tools to oversubscribe megawatts as well. Like there's a lot of flexibility within that envelope, and to date we've kept it simple. 200 megawatts of IT load for 300 megawatts of gross capacity, but we are also making it clear today that there is a reasonably sized opportunity in the portfolio to free up some of that spare power.
Awesome. And then maybe I could just follow up on some of the pricing commentary that came across quite strong, I think, in prepared remarks and the release. Kind of $20 million deals is what you're saying, or what you've signed. Now it's kind of somewhere around $25 million. Is that over what duration? Could you clarify? And is that more one-off, or do you think like that is kind of like the ballpark of maybe the average you're seeing across all the conversations you're having with customers?
No, we're seeing that consistently across live conversations with customers at the moment. And there are a variety of things that go into it. As Dan mentioned, we look at term length, prepayments, nature of the customer, likely growth requirements over time. But the pricing that we're seeing is relatively consistent at the moment. It continues to show an upward trend. We're seeing very strong competitive tension for near-term megawatts. So we certainly think that those numbers that we put out are indicative of where the market is currently at with upward pressure over time.
And to be clear, they're 3 to 5 year deals, not 2 year, not spot capacity. There is a substantial opportunity if you wanted to optimize near-term quarterly P&L to go and sell spot on demand. And that is something that we might entertain as part of the portfolio approach over time. But today, we are loving just building the customer base, diversifying across the AI ecosystem, having longer-term contracts, getting really accretive financing back in those contracts. And over time, that'll buy us a license to dabble more into on-demand, shorter-term contracts, introduce software leveraging Mirantis and other capabilities for higher revenue profiles.
Thank you, guys. Appreciate it.
Thank you. We will now take our next question from Michael Donovan from Campus Point. Please go ahead, Michael. Your line is open.
Hi. Thanks for taking my question. Just go back to the 20-25 million in revenue per IT megawatt. How do the economics you're seeing in the U.S. compare with what you're seeing with initial conversations in Spain and Australia?
I think very consistent. At the end of the day, this is largely a global market for compute. A number of the customers that are accessing compute out of North America are based overseas, and so it does drive a genuine global market for compute. And there may arguably even be additional scarcity factor in some of those other locations where it relates to things like sovereign AI, for example. So I think that pricing that we're seeing in North America is very indicative of global conditions.
Thank you. And then one more follow-up, if I may. I wanted to get clarification on the Nostrum acquisition. So it's my understanding it brought roughly 490 megawatts. In your prepared remarks, you mentioned Idaho's accounting for roughly 300 megawatts. For that difference, is the 190 megawatts across a couple of different sites, or how should we think about that?
Yeah, so there are a number of other development sites in the Spanish portfolio where we have capacity secured, but Badajoz is the key site that we chose to focus on today, as that is the nearest term build out and the largest site within the portfolio.
Thank you. Congrats on the progress.
Thank you. As a reminder, before we move to our next question, please press star 11 if you wish to ask a question now. Next, we have Nick Giles from B. Riley Securities. Please ask your question, Nick. Your line is open.
Yeah, thanks, operator. Good afternoon, guys. Just wanted to ask one about Texas. I know it's not a fun topic, but was just curious if you could touch on what some of these dynamics have enabled from a commercial perspective, just given that you already have 2 large-scale energized sites there. Thank you.
Hi, and by the dynamics, are you referring to Governor Abbott's directive or something else specifically, Nick?
Yeah, Ken, exactly. Just the directive and just given the uncertainty around some of the kind of earlier stage sites there, if that might have pushed some potential deals more towards your corner.
Yeah, I think as it relates to Governor Abbott's directive, if you look at what that is targeting, it looks at things like transparency, grid reliability, water usage, issues in terms of impact on local communities. And these are all things that we've had a specific focus on from day one and have always been important to us. So if you take Childress as an example, we funded all the required grid upgrades for that project. As you know, we're located a number of miles outside of the main town area there, where we don't have residential neighbours and we're not impacting neighbours or the local community from an operational perspective. We use a highly efficient closed-loop water cooling system, which has very minimal ongoing water usage over time. So I think everything that we've done in setting up our sites and our portfolio, is in line with what Governor Abbott came out with in his directive. So I think in that sense, we actually welcome the additional transparency within the market. And then, as you mentioned, we do have 2 very large sites already energized in Texas, which I think positions us extremely well outside of just those dynamics that I mentioned as we move forward here.
Oh, thanks, Kent. That's helpful. And then maybe just as a follow-up, we've seen a lot of deals where there's kind of initial contracted capacity, but then there's an expansion option, maybe with exclusivity for some period. And I can't recall Iren having, with any of those expansion options embedded. Is that something that you're considering in future deals, or have you kind of intentionally strayed away from those options?
Yeah, we've intentionally strayed away from that historically, but it's obviously part of the bespoke conversation with each customer. As you would guess from our thesis, which Dan outlined again earlier in this call, we see very significant value in infrastructure and compute moving forward. And so if we're going to give up an option to somebody over that, we need to be compensated for it. So it really just comes down to that dynamic. But yeah, we've generally shied away from it previously because we see more value typically than the counterparty.
Understood. Well, thanks, guys, and keep up the good work.
Thank you. We will now take our next question from Mike Colonnese from H.C. Wainwright & Co. Please go ahead, Mike. Your line is open.
Hi, Dan and team. Thank you for taking my question, and congrats on all the strong momentum here across the AI cloud business. Just one for me. I was hoping to get more color around how you plan to allocate future uncontracted capacity here. really the specific customer segment you're most interested in pursuing heading into 2027, and how you guys are thinking about balancing pricing with financing costs when evaluating larger versus smaller customer contracts. It feels like you're trying to monetize a little bit higher on the stack with, the acquisition here. Just trying to get a sense of how you guys are evaluating these deals.
Yeah, I think Dan touched on a lot of the elements that we look at earlier in terms of the earnings overview. I mean, we look to the type of customer, the industry they're in, their planned growth rates over time. As you would have seen with our customer mix, it has been shifting towards direct end users of compute. We now have added additional names in the AI native space, a large leading frontier AI lab, as well as some of these physical infrastructure related AI developers. So we see a lot of very attractive profiles across the sector, and for us, as Dan mentioned, we've been aiming to diversify our customer base over time. We have a range of attractive long-term contracts within the portfolio that now set us up for very attractive economics as we move forward here. And that in turn buys us some additional flexibility to be able to look at different monetization methods, whether that is selling on a shorter term basis in terms of reserve contracts that drive additional economics, whether it's looking at true delivery of on-demand compute, whether it's managed services offerings versus bare metal. And one of the nice things with the position that we're in today is we have optionality over all of those different areas, and particularly with the development of the financing market for sub-investment grade counterparties, which is something that we always expected to develop, and we're now really seeing the proof of that. It means that we can still continue to get very attractive financing for a range of different customer types. So we're certainly very excited at the prospects as we move forward here, being able to monetize the platform in different ways and get additional economics over time.
Appreciate all the great color, Kent.
Thank you. We will now take our next question from Ben Summers from BTIG. Please ask your question, Ben. Your line is open.
Hey, yeah, thank you guys for taking my question. So I wanted to ask a bit on the conversations we're having for 2027 and 2028. It makes sense that we're maybe not exploring some like the really short duration stuff now, but as you think about what you're hearing from customers in terms of the window from 3 to 5 year contracts, kind of where are you seeing most customers heading from within that time range, and what's the ideal, if there's any time length in your guys' perspective?
I'll jump in, Ken. I think we're starting to see longer term conversations, conversations around longer term than just the 3 to 5 years. But this is the balance, right? We're running it essentially as a portfolio. Anchor tenants like Microsoft give you the scale, the duration, and cheap capital with the 6% GPU financing, whereas AI developers and the broader market give you slightly higher pricing, good prepayments, and a lot of where the growth is. So we want to remain flexible. At the end of the day, the framework for assessing new customer contracts is, as we have outlined on this call, it's who and what does the counterparty add, what are the economics, and what does it open up longer term. And yes, there's a trade-off. The investment grade anchor gets a 6% money, non-investment grade gets 9%. So it sounds like the investment grade wins on that until you start looking at the pricing, until you start looking at the prepayments funding around 50% of the GPU capex. And I think those prepayments are probably the most exciting part for us, when they're funding half the GPU capex up front on top of the 90% financing we're getting already. These guys are sending a pretty clear signal. It's not just about contracting capacity. They're starting to finance our build out for us. And I think that tells you a lot about demand more than any pricing chart in a presentation.
Super helpful. And then just one more, if I could. If you could just give any color on preliminary conversations around potential data center financing. I know you guys talked about potentially pursuing that down the road. So just, wanted to ask around any preliminary conversations you've had there.
Yep, lots of preliminary conversations, and we'll let you know when we close one. But we've been busy. There's lots going on customer side, lots been going on the GPU financing. That's been the lower hanging fruit. We've previously mentioned we'll look at refinancing effectively horizons as they're commissioned, as it makes sense to wait till they're stabilised to get a better financing package. We'll look to finance data centres as they're commissioned, but potentially also in advance of commissioning. And one of the challenges we have and the opportunity associated with being vertically integrated is you've got this staggered GPU capex, which starts a couple of years out from commissioning. Sorry, not GPU, data center capex, which starts a couple of years out from commissioning, because you need to order the steel, you need to order the transformers, you need to order a whole heap of long items. And yes, a lot of those payment milestones are back-ended, but capex is incurred in the lead up to commissioning, and find efficient ways of financing that to allow us to scale into that 5 gigawatts really quickly, let alone the multiples of that sitting behind it in our pipeline. Like, that's the big unlock for us. Like, the customers, they're there. Like, I don't think anyone's disputing that anymore. So for us, it's all about that capital flywheel and managing it efficiently to get us in a position where we can meet that market demand, because we are in a really, really unique position, because we started 8 years ago. We locked up all the land and power. We've aggregated the team, the expertise, the partnership and collaboration with NVIDIA to build and operate these things. And capital efficiency is a really big part of the next unlock. And GPU capex efficiency is now here. Like, objectively, the data we've published today, what we've closed, that is efficient, and it will only get better. In terms of the data centers, that's the next frontier, and we're pursuing it, and we're excited about it.
Super helpful. Thank you for taking my questions.
Thank you. We will now take our next question from Joseph Vafi from Canaccord Genuity. Please go ahead, Joseph. Your line is open.
Hey guys, good morning, good afternoon. Congrats on all the progress. I know, Dan, you commented, obviously, power remains the major constraint. We're on this call, we're having a lot of discussions on financing. Obviously, you've got a lot of resources available at your disposal, but it's a big industry, and a lot of people are doing a lot of financings out there right now as well. Just some high-level thoughts, maybe Anthony or Dan, on the financing environment, sustainability of the industry to continue to finance this broader build out at this pace. If there's anything that you're worried about there, how Iren may have some advantages, given its different pieces to the business, and then a quick follow-up.
Cool. Thanks for the question. I guess we've touched on a few of the sort of fundamentals at the moment. I guess we're seeing, if the evolution of the market has been on the GPU financing, we've seen it started as a private credit-led product at sort of mid-teens returns, and investment grade cost of capital now is sort of in that 6% area. We've obviously seen the market open up in terms of the pools of capital participating in GPU financing. So private, public markets, investment grade, sub-investment grade. That's all positive. We've obviously, as I touched on, also had the other considerations, such as the big announcement by NVIDIA with 6 of the biggest global allocators, which will provide more support to the market. We've also spoken about prepayments, which are obviously a big part of the overall funding position as well. We've obviously also seen the data center financing market evolve as well to support the infrastructure to build out, both in the high yield and the investment grade space. And obviously there's obviously very strong conviction in capital circles in terms of the the sustainability and outlook for I guess this fundamental shift that we've had in technology and the investment that will that needs to be made, and also conviction in the returns that will ultimately come. So I guess it's really that conviction which I think will attract capital and continue to attract capital. Obviously, we need to continue to evolve our plans subject to market conditions, and obviously market conditions can go up and down, and obviously we need to be nimble and flexible in terms of how we adapt to that environment and adjust our plans accordingly.
We hear this question a bit, Joe, which is, can the financing keep pace with the asset class? But let's just look at what happened. 12 months ago, GP financing barely existed as an asset class. And then in the last 3 months, we've raised 6.5 billion of it at both ends of the credit spectrum. So that's not us getting lucky with financing. That's a market forming, and markets, they form the same way every time. Think about real estate financing. No one asks whether an office tower with a signed tenant can get a mortgage. There's a whole capital stack that exists for it: construction finance, term debt, institutional money, because the cash flow's contracted, the collateral's real. And that stack took years, probably a decade, to build for property, and it's building for AI infrastructure in months and quarters, because the same ingredients are there: the hard assets, the contracted revenue, the institutional counterparty. Blue Owl and PIMCO, they're not bit part players. They're the largest infrastructure lenders in the world, and they've now underwritten us, and we've got a dialogue at the highest levels there. But I think the analogy actually undersells it a bit, because a building leased for a few decades at a few % yield, our contracts are paying back this compute investment in around 2 years, with customers prepaying half the capex up front. So lenders can see their money back in really short timeframes, and property finance never had economics like that. So I think whenever there's a new emerging market, if the demand is real, the financing follows. It always has, whether it's for railway, for telecoms, for property, for power. And in terms of whether the demand is real, I think the customers are proving it. They're proving it with prepayments. They're proving it with their end markets and their results and their revenue and their customer market traction. So the layer that hasn't really started and developed as much as the GPUs are the data centers. But in traditional speak, the data centers are actually the easier ones, because they're more closely aligned to property and real world infrastructure. And there is cash there. We know that. And it's waiting for us to pull the trigger, and we'll look more closely at that over the coming months.
Great. Thanks for that caller, Dan and Anthony. Much appreciated.
Thank you. That was our last question for today. I'll now like to turn the conference back to Dan for his closing comments.
Thanks, operator. Thank you, everyone, for joining. So the short version of FY26, 4 billion of ARR contracted, 1 billion is operating today. Horizon 1 has been delivered to Microsoft, and as we've just touched on extensively, a funding model that's working efficiently at both ends of the credit spectrum. So all of this achieved on a fraction of the platform that we've got today. And I guess shout out to the Iren team around the world and everyone who has joined us in recent months, with Marantis, Nostrum, a variety of broader players in the market. Keep doing what you're doing. The plan doesn't change. We keep delivering capacity. We'll keep converting it into durable customer relationships, and we'll keep funding it with discipline. Thanks, everyone. We'll see you at the next result.
Participation.
Okay. Wrong thing. Okay. Yeah, it was. All right. That was honestly a pretty impressive call. Now, stock's bleeding. Bad. Real bad. And I gotta tell you, I was pretty impressed with what I heard. And I need to do a little bit more, just fine tuning, but I think I'm going to start getting back in as an investigate kind of thing as I continue to knock off some dust about Iren, but I was happy about the prepayments. I don't remember that being as big of a focus in the past. They were kind of just landing deals, but I don't remember them ever talking about doing prepayments. So that helps with the capex. Um, they've landed a lot more smaller clients. They've landed a lot more deals that we hadn't really heard about. Um, Filling out that ARR, they're smaller deals, but he also still said they're still 3 to 5 year deals. So I liked hearing that. It does look like the 2026 ARR is 4 billion. I noticed on one side that said like 4 billion plus. I have a feeling if it was actually going to be 4.4 billion, they would put that. They wouldn't just put plus because uh, they'd like it to show a bigger amount. So I am curious. I need to go back and look because I want to make sure that that's not like an interpretation error or like a remembrance error because I was getting out, and I think it honestly happened after I'd already gotten out when they changed the ARR. Uh, Let me see if I can get Joseph back in here. Hey Joseph, are you still here?
Self. Yeah, can you hear me?
Yeah, I can hear you.
Well, yeah, I was just saying, dude, they were like on there, and I don't even know. They came out so flat, and that call was boring. There's so
Oh,
many
I
people
kept
in the thing,
dozing
like I
off.
get, but I on overall, I can't be mad. The quarter was great. The dudes just need PR train, but you know what? Keep the stock price down. Push the price down right now in the short term, and then run high in the long term, so I can get bigger gains on my investments. Is what I'm sitting there. But overall, I mean, I'm very, very thrilled that we actually beat on revenue. Um, and that everything's on time. Their execution's good. So I can go and talk bad about the call, but at the end of the day, they've been executing, so I don't really have anything bad to say. I'm just going to nitpick on here because I just had to sit through that for an hour. What did you think about it?
I was like dozing off on segments. Like during the like presentation, I didn't necessarily care about the commentary because I was honestly more locked in on focusing on reading on what I wanted to actually know rather than like what he was saying. But I'd say my main takeaways were I'm happy with the prepayments because I don't remember like I swear that one of the biggest bear cases for a minute was about their financing strategy and that they weren't taking on prepayments like a Nebius was or whatnot. So I feel like
Yeah.
that's a newer thing is them locking in all these prepayments,
Yeah.
but maybe
No,
I
that's
just wasn't in it enough to like know.
Yeah, I think it's also huge that customers are also going to help financing the build out is something I took from that because I mean it shows like the customer saying like we need the neo clouds, we need these data centers to go up and when they need them to go up fast because we have so many remaining performance obligations and we can make so much more revenue that's like a very showing that the AI trade is going to keep on going that like people are saying we need compute now and we're willing to pay up for it. And I mean in the next years we're probably going to be seeing 30 deals for 30 million per megawatt, which I mean, that's just going to make these margins get unbelievably high for a company. And like you said, the bear case is you do a finance, take this debt and all that type of stuff. And if you can just raise your margins like crazy, if you're financing and have to go raise money, well, you have higher margins, so you can pay off all that debt, all that interest payment a lot easier if you have to take debt.
And they own the land and all that. And the biggest argument I've always had is like, you're telling me the people like who are subleasing, they don't know how valuable their land is to them. Like, just like data centers are charging crazy because of GPU pricing, like so are these landlords who know you have these data centers on their property. So,
Exactly. And
that's not an issue they have to worry about. And when it comes to like paying off debt and you think about that, like all that stuff, Iran in the long haul, you would think will have a easier time doing it because their gross margins should become better. I guess it can also be argued because they have a worse software stack, per megawatt could end up being worse. But as of now, we're not seeing their per megawatt get worse because we just had like it was like a post like a week ago, and it was displaying like um how many dollars per megawatt these neoclouds are seeing, and Iran's at the top of the list, and the argument is also, well, their deals are longer. So we have to see how, this matures going into like future years when like their
yeah,
3 to 5 year deals are towards the back end and some of these neoclouds that are doing these shorter term deals are constantly getting new deals. So we'll have to see how that evolves, and that will really kind of like determine. But I think the dumb thing is like it's clear, like the like when you look at the top three neoclouds, there is demand for all three, and no matter which one you're in, you're going to win. Now there you might have to time when you get out because when demand slows down, price per megawatt's gonna collapse and all that stuff. But for now, there's no reason for me to think that like whether you're in CoreWeave, Nebius, or Iren, their numbers are going to go up and to the right. And you can try and predict what the stock price does in the short term, but in the short term, it's always irrational. But if you can see this build out happening over the next 2 to 3 years, which is something I argue because, we still are barely like peaking with like this OpenAI and Anthropic thing. After that, you still have robotics. You don't know what's going to get unlocked with like self-driving vehicles as those become more nuanced. You don't know what we don't know yet. I mean, I feel like agentic AI was a new thing this year. So like you don't even know what the next development's going to be. Quantum computing. Uh, you know, there's just so much more yet to be seen. And then you have um these healthcare, the argument of how big AI can be in like drug discovery. I haven't heard of any crazy AI drug discovery yet. Like there's gonna be more compute wanted for like companies like that. So um I still feel like AI is like just now scratching the surface, and you look at the development from like I mean when OpenAI had its moment in like 2023, I want to say the spring is like when people started talking about it. Um
Yeah.
and then I think about like last year, like I would have ChatGPT make me a graphic for a thumbnail, and it could not do it. It sucked. Like it could do it if you got lucky and made it make something plain and stupid, but what it's doing now. So then you gotta wonder what it's gonna be like by next year. And I think it's very safe to say in 2 to 3 years, like the build out might be getting near complete, but when you think in the next 1 to 2 year, like the amount of funding that's going to go into it, I just believe there's still a lot of runway here in any of these three names.
Yeah, no, I agree with you. I think there's so much runway for this AI build. And I mean, Iron, like the thing with their contracts is say they're signing 3 to 5 year contracts, right? Say they go up to that 800 megawatts they have. Well, they still have 5 gigawatts left of capacity extra that they're going to be able to do contracts on in the future. That's going to come up and get energized as the build out gets bigger. If it's with agentic, with if we have robots. Because my thing is, I think we're going to have robots that are going to go and be able to mow your line, do all this stuff that you don't want to do and waste your time doing in the future. You know what I mean?
I
And
definitely think in at least like the Amazon facilities and the stuff you see like that, like there's no reason I can't think like a robot can't pack a box, and if that, they might be quote unquote slower because you've seen those videos, even though I think they're gonna get better anyways. But
yes,
compared to that, well, the robots work 24 hours a day. You don't, so um,
and they
you gotta
probably
think
work for
about
cheap.
that. Yeah.
I mean, yeah, and that's the thing about them. And I don't know, I just think people like I don't know. People are just going to react and think whatever. But I think long term that it doesn't really matter what in the world even like happens with like they just got to turn profitable and just prove that their execution, prove they can get contracts, and that's what's just going to lead to that stock price re-rating. Where, like you said, all three neoclouds should win in the future, right? As long as credit stays fine and we don't have some insane high rate hikes where you get a 10-year bursting above like 6% or whatever, and if you can get the cost of debt down in this AI revolution, that's going to allow the build out to go on for a lot longer. Because if you say you have to end up borrowing like $1 trillion at a 1% higher yield, that's still a lot of money. That's not, you know what I mean? So that's what I think the biggest factor is. You got to keep credit, you got to keep yields good. And Iron, Corey, Nebus, all of these other companies, like for all these other people that are doing the subleasing, everyone's going to be making a lot of money in this revolution as long for the next few years. And I do think we're still very early, especially for the neocloud plays, like right, like Iron. Even at the end of next year, they're still not even going to be 20% built out with all of their energization and capacity. which is crazy to think about it. So that many years of like higher revenue and execution coming in is pretty interesting. And like if that's a different way that people look at it, like if these companies are like barely even started building out and we're so constrained, we have a long road ahead of us as long as the financing, the debt markets, and we have that happen.
Yeah, I agree with you. I will say I do gotta hop off, but I wanted to ask one. I did want to make one quick statement. Is I think I might have brought it up, but after this, I'm definitely tonight. I am going back over the presentation. There's a few more questions I have, and I'll probably ask you privately since I do have to go. But I'm gonna go over it, and I definitely think that I'm about to get back in this game, just because
Yeah, I mean,
it's gotten sold off so much. There's no reason I can't at least sell some cash secured puts on an investigate type thing. TA
mhm.
wise, I don't see this thing breaking $30. If it does, I mean now we're getting close back towards my actual entry. I mean the only thing scary is like you say is like the debt being so much, but
That's yeah,
I
but I mean, and the thing is, that's more for me. That's like all you go. But in my opinion, that's more of like a 2027, 2028 problem. But like, I don't know if they would really, if people want to go and sell the stock to under 30 right now after this earnings, you know what, go do it. I'll buy every share in sight then. So that's what I'm just looking at the end of the day
yeah.
and gotta figure out and keep adding because I mean, every time the stock price goes down, my risk versus reward that I'm worried about the company gets better, dilution or whatever. The bear case gets weaker the more the price goes down if fundamentals are getting better because a bear case usually you have to make it on a stock being overvalued. If a stock's not really overvalued, you're gonna have a hard time making a bear case because the bear case is probably already priced in.
Yeah, and like when you look at the other competitors, I mean they also have the same issues, but then you look at the disconnect. It's like, okay, eventually are these gonna come down, or is
Yeah,
Iren gonna get re-rated to be with them?
yeah, and like yeah, I mean I can look at it like yeah, I mean Nebus definitely trades at the highest. CoreWeave trades like half as cheap, but I mean CoreWeave realistically like
I've
there
been
is a
looking at
lot of
CoreWeave. I think that like there's no reason like with their backlog they should be the same
yeah
market cap as Nebius
yeah I think no I think definitely like they could I are they yeah I don't know I mean it's just I mean
Their
yeah Nebus
backlog last I knew was double Nebius's. Now it's might have changed after last earnings. I low key haven't looked at the updated
yeah
backlog, but both
they just
both I remember smashing earnings, and I also remember like making a mental note that it was looking like CoreWeave would be profitable. Um, maybe next year.
I think let me see what analysts don't have till 2028. I think next year because I'm pretty sure they have I think they have $30 billion of debt if I'm pretty sure as of last year, dude. I think they have a crazy amount. Let's see what they had as of 2025 and I guarantee you they have more debt. They have dude, where is it? Yeah, I mean they have $30 billion of debt. They have a lot of debt is the problem with them. But the thing is they're a $47 billion market cap with $30 billion of debt. So that's what I think is just why people aren't sending them because I mean, bro, you almost have more debt than your market cap at this point, which that's really not good to like, you know what I mean, see if they go down. And I mean, that's just the problem. Like, I don't let me see what their earnings are supposed to be. Let me see what analysts have for their consensus of revenue, which that analyst consensus is probably low for next year. But okay, so next year they have 26.5 billion for their consensus. Probably low, right? And say, but I mean, let me see. I don't know how much debt they have this year, but realistically, I mean, I think they're gonna need a year or two just to go and pay off all of that debt. You know what I mean? To turn off like they're gonna
Yeah,
all that money to go right to their debt
as
because they
soon
don't want
as
that.
yeah, it's they're gonna have to pay it off.
Which if I mean the thing is if this revolution keeps going for a while, once it hits 29, dude, then this company's really like wow. Because I mean, say they put up 5, 6 EPS in 2029, right? And say even they grow at 50% of the next year. So say they put up like 10 EPS in 2030 at a forward price to earnings ratio. Say they're at like a 40 forward price to earnings ratio, um, times that 10 EPS. It's a $400 stock in at the end of 2029 for CoreWeave. Now, you know what I mean? So that's just, I mean, it's just simple math there, what they could be trading at. Even if they trade at a 20, the same as the market, right? 20 times 10, $200 stock, you're getting still a 1.5x over the next few years in this stock. So I don't know. You got to, I mean, it's just, if this build out goes good and the credit and everything stays fine and the bear case doesn't happen, which is always something you have to keep in mind, all of these stocks are going to have enormous runs in the future and be completely re rated, trading at way higher multiples. And
Yep.
but yeah, all right, cool, bro. Peace. I'll let you go. Just send me those questions, whatever you have.
All right, yeah, I will. I'll be digging tonight, so I'll
All
catch
right,
you.
cool, cool. All right, bro. So peace.
All right, guys. Thank you for tuning in. I gotta go. Babysitting duties. But as you can see, Iren continues to dump here. I'm gonna do a little bit more digging. This was kind of my, trying to figure out what's going on in the business again. Hadn't been tracking it for a little while. It definitely seems like some new things are going on. Some good things. Stock hasn't moved much. It's already about half the price of when I sold. So if they felt like a good time, I could put half of my earnings from last time I sold, and I would have the same position I had before. I could almost double my position from before just off my run money from before. So I'm definitely gonna start giving it some entertainment once again. But that being said, thank you anyone